Does this Fed know what it wants to accomplish with a presumed rate cut?
I'm not sure it does, because if, for example, the economy were running into trouble, and if the Fed is taking out insurance against a potential downturn, 25 basis points does nothing. If the Fed, on the other hand, is making the argument that inflation is persistently low, and the dip in inflation we've seen this year is more than transitory, and so they're just tweaking the level of the funds rate to keep an unchanged policy stance, that would be a different argument. And they seem to kind of want to be playing it both ways at this point. And my fear is that if the Fed makes that cut on July 31st, that in risk markets, the risk market interpretations just go with the first, that the Fed sees trouble coming, and it becomes counterproductive in terms of the potential impact. Now, right now, I think the market's saying, well, I think the economy is okay, but it looks like the Fed's going to cut, so we can enjoy the party. But
so what do you think they should do, John, given what you've just explained?
I would be more comfortable if the Fed were just on hold and signaling that it was on hold. But it really seems a very dovish, let's say, we talked about it, it's a classic, it seems to be a classic weakness bias, where the Fed looks like it's going to cut rates unless the data talks it out of that. And to be honest, with an unemployment rate at 3.6%, and with inflation where it is, I just don't see that 100% probability case for a rate cut on July 31st. But now the question is, has the Fed talked the markets into it? Because come July 31st, the Fed will not disappoint the markets. If the markets are still saying we're going to, the Fed's going to cut rates, then the Fed's probably going to cut rates.
But John, but is this also them trying to keep up with the other central banks around the world? We were just speaking to Joyce Chang of JP Morgan, and she was saying, look, this feels like some kind of coordinated action from central banks, to deal with the possible downturn. So if the Fed is the only one without the dovish bias, then dollar suffers.
Well, the dollar strengthens. And to me, that's
that's bad for the economy.
And the dollar policy, as the chair reminded us yet again yesterday, is not within the policy sphere of the Fed. In some, that's for the Treasury. Now, all of this, going back to that conference in Chicago, this latest move in the markets was kind of opened up when the chair said at the beginning, he's doing this long-term introduction to this long-term, we're rethinking monetary policy, but there's this trade stuff going on, and we're watching it, and we'll take whatever steps we judge appropriate. And everyone read whatever steps judge appropriate is the Fed's thinking about cutting rates.